Good afternoon, everyone. Time for another silver update. Had a little rally today. Looks like the low that I picked of 28 is pretty much held. Would have been a good place to buy if you could get in. We'll see. We may turn around and go down. I want to point out we do have a new falling trend line that is forming, possibly even a channel, maybe. And we're going to see how this plays out. That's a rough guess. Basically, we're looking for a break up above here. Let's see if this MACD can reset and we can break above there. That would mark a breakout from this falling trend line. As you can see, we recently reached the high of 31.2. We've corrected roughly 10%. Which is fascinating because if the stock market corrected 10% in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, they'd be apoplectic. You know, they'd be screaming about the end of the world. But silver can drop 10, 20, 30%. No one even notices, which is actually a good thing because when silver goes up to 50 and then 100, no one's going to notice that either. It looks like the buying started last night in Asia, as you can see. Around 3:30, that's roughly when the Asian markets open, and boom, we got quite a leg up. Held most of the gains all day, tried to rally hard through 29 and failed, so we'll see what happens tonight. A longer term view on the daily, as I was pointing out, the MACD, if we bounce here and the MACD reloads at the 0 point, that could be very bullish. That would be a complete reset all the way back to February, and that would be a very bullish sign and a sign that we have basically digested these high prices and we're ready to move higher. Now, of course, the weekly is still very spiky, so it remains to be seen if we can go higher from here. That's a pretty dramatic spike on the MACD for the weekly. But we'll just have to wait and see. I have seen these go higher. I've seen them go much higher. I've seen them go tenfold from there. That can happen. So we'll just have to wait and see. Wanted to point out a couple of articles. Actually, a site and an article. This article came out a few days ago. It's by Adrian Douglas. I don't know if you're all familiar with Adrian Douglas. He's with GATA. And he is excellent analysis of the silver market, and just wanted to point out this article. I'll get the link there so you can read it. It's pretty. It can be difficult for some people. You need to have a basic understanding of the futures market and how they work. I don't really have time to go into it here, but I will do maybe an office series or something on the futures, how they work. Basically, you've got a number of months that are delivery months, and for every buy, there's a sell. And that's called a contract. So a contract is an agreement between two people to buy and sell at a given date. So it could be December, it could be March. And it's for silver. The typical is 5,000 ounces of silver, and so if you bought the $30 futures contract March silver and the price went up through 30, you could sell that right the day before expiration and pocket the difference, or you could stand for delivery and you would buy your silver at $30, even though the price may be 32 or 33. You had a contract to buy for that set price. So that's basically the concept behind it. It's a hedging mechanism that was created originally for farmers and for producers of various other crops, because they had the uncertainty of the seasonal. The harvests were seasonal, so they didn't really know what the prices were going to be. They didn't know whether they were going to have a terrible harvest or a good harvest or whatever. So what they would do is they would hedge their future harvests by selling them forward. So if they were expecting a decent crop next spring and prices are really high right now, they could sell it in the futures and lock in that price. So that's the idea. That's how it was started. Now, of course, we know J.P. Morgan's involved in this market, and a question one would ask is, why is J.P. Morgan selling silver? They don't produce any silver, so why are they selling it? So we all know the answer to that question. Anyway, so what he's doing here, and you'll have to read the article to get all the details, but synopsis is he's looking at open interest on the silver futures contract. These dots that he's done, or these circled areas, okay, these are the number of open interest. As you can see on the left scale here, that's open interest. That's a number of contracts outstanding. This bottom scale is price. So what he's charting is, as the price rises, how many contracts outstanding do we get? So, and his main point here is that initially, in the beginning of the bull market, where we went from roughly 5 to 20, say, as the price rose, the open interest rose. Okay, and so what that's implying is that as the price is rising, more contracts are coming into existence. Now, the assumption here is that it's the naked silver shorts that are opening short contracts, selling it short. Now, of course, there has to be a corresponding long, and that's what depresses the price, because people may not want to take the other side. That pushes it down. So the pattern he's noticed is that as the price has been rising, the open interest has been rising as well, in an attempt to cap it. That would be the assumption. Now, he's noting these patterns of here's a flat rise as the price rises. Here's it's tapering off a little bit. Here it's tapering off more. Here it's tapering off even more. And now, after we rise above 21, the number of open interest contracts is decreasing from the price of 21 to roughly 31. It's decreasing. Now, what that means is they're backing off. As he puts in his headline, strong indications of gold and silver shortages. So the shorts are starting to back off. This may be a sign of coming capitulation. We don't know. But it is definitely a change in the character of the shorting of the naked silver contracts on the COMEX. So I just want to point that out. I'll put a link for that article and you can go and check it out. The other side I wanted to look at, I've covered this once before, but really briefly. This is a eBay silver bullion price list. And what it does is it tracks all of these coins and what their melt value is and what the price is on eBay and what the difference is between spot. Now this, you can see the Silver Eagle here is, you know, the spot price $28.72 basically, and it's showing $43.67. Now I know they're not going for that much. That's too much. And one thing I don't like about this is I think what it uses the buy it now or newly listed. It's not using the completed listings. When you're looking for eBay, you always want to look for completed listing prices. That's the price that someone actually paid for the coin with shipping. So if we want to check the Eagles, make sure you're logged in, because you have to have an eBay account to view completed listings. Mine's already logged in, so we'll just click this, completed listings for Silver Eagles. And as you can see, it takes us right to, well, here we go. We've got 5 Silver Eagles that sold for $175. So that's pretty good. What's 5 into 25? That's $35 a coin. Here, 6. Well, those are proofs. We'll get down here to a roll. Here's a roll, $700, $35. So as you can see, we're not at this price. I really like to see an average of completed listings, but it's a fantastic tool, and it allows you to do a one-click for any of these. Let's say you were thinking about, well, what are the 1-ounce pandas going for? All right, we just click there. And you can see, and pandas are pretty steep, although I don't think they should be because they're so they're being counterfeited so much. But here we go. You're talking $50 for a lot of these. So the ones I like are the Lunar Series 2. This just has Lunar Series 1 ounce. So let's see how search parameters work on that. It looks like it's every Lunar Series. So we see the rabbits up here, $40. Here's a roll of the ox, and that's 1 ounce roll of 20. Wow, $50. Incredible. So here's one I like, the koalas. So they're kind of a collectible. I like them because the reason I like these is because you can pick them up for bullion price, but they have a nice numismatic kick to them. Sometimes you have to time it right, but it's always nice to have that numismatic price in there as well. The reason I like that is if I do decide to sell some coins in the interim, I'm going to sell off the numismatics and reinvest it into bullion, just rounds, and be able to pocket a profit. So that's a little strategy there. Whatever strategy you use, that's up to you. Anyway, that's that page, and it's a fantastic tool to use. There's also one for gold, and you can get that link. I'll put the link for this. So we're still rising. We're trying to get through $29. Would like to see us break through $29 tonight. If we get through that trend line that I pointed out on the 10 minutes, actually no, it's back on the 15. If we can get through this trend line here, we may be off to the races and heading towards 35. So hopefully you got in at 28. If not, we might get a lower price, but you never know. It might just take off and not look back. And talk to you next time.